Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Yellow Tunnel and Tradespoon. And today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. Fred, Chet, Phil, good morning. How are you? All right, we're live on Discord. We're live on YouTube. Trying to get everything set up. We're live. Let's see, we're live on YouTube. Tradespoon content. All right, we're live on Discord. We're live on YouTube. Trying to get everything. We are. Okay, perfect. So we are live everywhere. That's good news. Excuse me. Okay, welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. Today we're going to have our live trading room open. Before we begin, let me know if you guys can see my screen and hear me, and we'll begin shortly after. Loud and clear. Patrick, William. Hello, Bob. Brad. Chat. I'm good. Thank you for asking. Trader, good morning. Paul. Sometimes I talk too fast with a Ukrainian accent. Okay, I'll work on that. I do have to cover a lot, but just always stop me. I don't mind if you stop me, just ask me to repeat. I'm sure, you're not the only one who's asked things that I talk too fast. Good morning, Raymond. So yeah, just stop me if I need to repeat something or I'm going too fast. My brain does work fast sometimes, too fast. All right, let's start. Welcome to Yellow Tunnel and Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have our live trading room open to trade stock and options. We are broadcasted on YouTube. Welcome, YouTube subscribers. Please click subscribe button to watch our videos. Welcome on Discord and go to webinar. My brief bio is Executive Vice President, Head of Technology at Options Express. From its inception through 2007, Options Express was a online broker-dealer acquired by Charles Schwab. At some point, the company was worth over $2 billion. Very proud of that experience. Since I left Options Express, I work as a consultant and investor in several financial technology firms here in Chicago. One of the more famous are Groupon, MediaOcean. Started Tradespoon in 2012, started Yellow Tunnel in 2018. I want to say, use this opportunity to say thank you to all the subscribers, whether in YouTube, Discord, or go to webinar. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 20 years, managing and trading teaching how to trade options and stocks. And finally, I have master's degree in computer science. My whole, my corporate experience was always on technology side, building programs to trade. Disclosures are very important. Trading, I'm going to go through specific trading examples. So trading stock and options involves risk and not suitable for everyone. You must be aware of the risks and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered as FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and Trading Block on the bottom of your screen. All right, trading psychology. On Discord, let me know if the resolution is better. Right, I upgraded my server. Let me know if you guys upgraded your client to Nitro, but I think resolution has been an issue on Discord, and I'm just trying to figure out if it's better or not. So just type in if it is or if it's not. That would be great. All right. So let's talk about first some of the foundations of trading. So again, you know that especially in Yellow Tunnel in the past few years, I spent a lot of time on building content around emotional intelligence. We brought several speakers who have clinical psychology background. So especially in a market, in a bear market, right? By definition, we are still trading in a bear market. Yes, we had a 20% rally, which also by definition kind of means that this is a restart of the bull market. But, I think in terms of division, half of the people think that we restarted bull market, half of the people think that we're, this is just an over-exaggerated rally and, the bear market will resume or already resumed. So I'm in the camp of that bear market has resumed and, this is was the strong rally, maybe more than most people anticipated, but nonetheless, the lows are not set in, right? Either this year or next year, we will retest and eventually break the lows, which is by definition bear market, right? Pattern of lower highs and lower lows. So when you trade, especially when you're trading in the bear market, and if you believe you're trading in the bear market, trading psychology is extremely important, right? It's extremely important, and not only to understand these concepts and read, self-improvement books, but to practice, right? You have to practice these concepts. So I've been inspired by some of the Stoic philosophy books, right? I just read one recently, actually from a trader. So it gives me some of these terms, right? I actually do not know that. I mean, I've learned these concepts as tools in by having a coach, right? Trading psychology coach, Dr. Maneker. But I did not know that there's actually terms associated with Stoic philosophy. So I kind of put them down. You guys can look them up. So one is dichotomy of control. Not all of it is Stoic philosophy, but these first two are principle of Stoic philosophy. One is dichotomy of control. What is the dichotomy of control? Stoic philosophy, back to Roman Empire, 2,500 years ago, believed that put forth this concept that ultimately we humans, we as humans have only control over our actions and thoughts, right? Everything else we don't have a control over. Basically meaning, you can't really spend too much your emotional energy on things that are outside of your control, right? Friday we have unemployment numbers, right? Nobody knows will that cause the market to rebound and retrace some of the losses, or it will precipitate another leg down, right? You don't have control over that, but you do have a control going into this uncertainty, into this event. What are you going to do about that event, right? What course of action do you have? We always talked about, well, cash, right? Nobody can tell you how much cash you should have in your portfolio. You can look at the average, but this is within your control. right? If you think it's in bear market, I propose 50% portfolio in cash on average. If you think we're in a bull market, okay, fine, 30% of your portfolio should be in cash, and you can start deploying some of that cash to buy on the dips. But the point is that certain things you have control. How many positions you have? What is the maximum? What are your stop losses? All of that is within your control. So having a trading plan, a process, and believe in this process and live through this process, right? It has to become part of your internal information. You have to internalize this information. So I encourage you to consider kind of researching on these items and practice this. The best practice is to journal, right? You journal on things that you cannot control and how you react to them, and you journal on the things that you have control over. So the economy of control is important. Second one is negative visualization. Why negative visualization? We have unemployment numbers that can spark volatility. You have to, let's say you're bullish, right? There's two types of traders right now. I think most common idea is that, this is a healthy pullback. We retraced 50% of this July-August rally. We're in the bull market. This is an opportunity to go long, right? To buy, right? The market is oversold, right? So we've retested this 50% retracement, which is probably the line in the sand between bulls and bears. So now you have to make a decision, right? So let's say this is support number one, right? So you have support number one. You have support number two at 388, right? This is basic Fibonacci retracement, but you also can see, that these are main support and resistance levels, right? That we've revisited many times in the past few months. And then, 52-week low is your support number three. So if you're buying at 399, first of all, you buy because you think we can retrace back to at least 420, maybe even 430, or if you think we're in the bull market, 450, right? So a lot of room to the upside, maybe 20, 30, 50 points to the upside. Let's say not realistically, but I think we're still in the bear market. We're not going to revisit the highs, but we can revisit 420. That I would not be surprised, right? So you have 20 points to the upside, right, in the next maybe few weeks, right? After the Labor Day, everybody comes back, realizing 50% retracement, so plus 20 points. So that's usually when you buy, this is your first thought process. I think market can at least retrace half of its losses, right? We're down 8%. We can be up 4%, which is 16 points, pretty significant. 16 points, 20 points. So that's the positive visualization, right? That comes naturally to us. And most of the time, we don't even think about stop losses. We just say, okay, I'm buying at 400 because I think it's going to go to 416. Press the button, buy, right? Robinhood made it very easy. You swipe and you're in. Great. But you have to determine the position size. So the negative visualization, which Stoic philosophers practiced kind of on a daily basis, immediately you have to pick up your pen and start journaling and say, okay, that is the positive visualization, right? After Labor Day, everybody comes back, market is oversold, plus 20 points. What is the downside? Well, downside is, you can select these two levels. You can say 390 is your stop level. If you're aggressive short-term trader, basically you're risking 10 points, right? You're risking 10 points to make 20 points, right? If we break through the 388 level, most likely we're going to quickly retest the lows, right? Or at least open the door to retest the 52-week lows. I mean, June, July lows. So that's your setup, and that's a negative visualization, right? The second thing is, to kind of build this process or routine, right? And in your journal, the second question, this immediately, the way my brain works, well, then, if this is my stop loss, how many shares am I willing to invest in order to look for? So I propose to always risk the same amount. If you trade in Forex, if you trade in futures, on options on futures, whatever the most volatile instrument you can find, or Bed Bath and Beyond, right? Let's say buying calls on Bed Bath Beyond because everybody's buying them. you always risk the same amount, right? So if it's highly volatile, you just buy less shares, right? But you always risk the same amount. Because the problem, if you're buying, $1,000 of Bed Bath Beyond and $1,000 of Spiders, they're not going to move in the same correlation, right? Bed Bath and Beyond is down, I don't know, 30% today. It was up 50% yesterday, so it's going to move a lot. But people like things that move fast, right? Because it means you can make money fast. But it also means you can lose money fast. So for that reason, I propose to be a disciplined trader, you always risk the same amount per trade. So if it's 10 shares, you risk 25, 10 points to the downside, you risk 25. You buy 25 shares. Right? You buy 25 shares, and if it drops below 390, you're out. Or you can maybe buy 15 shares now. You think, after nobody wants to hold the position through the earnings, through the Labor Day week, going into the Labor Day weekend, and we might retest 390, or at least come close to 390. So then you buy the second half of the shares, right? Dollar cost average, another important concept, dollar cost average. To deal with uncertainty, right? To deal with uncertainty, you basically say, okay, fine, I don't know if you're going to reach 390 before we get to 416. Since I don't know, and I'm not 100% sure, then I'll just reduce my size, break it into half, maybe 30%, right? People use option laddering, right? They build their position in different strike price and different expiration months, right? Very popular option ladder. And that would be approach. So negative visualization, stop loss, very important process. I encourage you not to use mental stop losses. Build it part of your routine so you internalize this information, right? So you don't even think about it, right? You kind of get into this free floating mind. It doesn't happen overnight. It doesn't happen in 3 times, but you do it 7 times, you do it 20 times, and if you write it down, that slows down your brain and that helps you internalize information. So I think this process is very important for you to kind of master, to be a disciplined trader and help you trade. Hi, Gary, welcome. FTLT, welcome FTLT, T5, SK, how's the resolution? Is it the same? FTLT. FTLT is typing, all right, let's see. And I'm gonna do the speed test. See if on my side it looks fine. Much better after subscribing. All right, FTLT, I'm gonna celebrate today. All right. Okay, yeah, so my ping and my upload download is very high, so that's fine. Much better after subscribing. So okay, so if you do have issues, FTLT finally resolved that issue. Thank you. I think Fred or somebody recommended. Yeah, if you have issues with the on Discord, you would have to just upgrade to Nitro. I mean, it's, I don't know what it is, $5-7 a month. Hopefully this content is worth $5 a month. Okay. Gary, welcome. All right. Please join broadcast. Okay, so we're live on YouTube. Please join us on YouTube. We're live on Discord. Please join on YouTube. It's Tradespoon. On Discord, it's Yellow Tunnel. Both same live trading room. All right. Any questions so far? William, thank you. Good morning, Lalit, Terrence. Welcome. Got in Yellow Tunnel. Thank you, Todd. Thank you, Todd. Let me know if the audio and video is good on Discord. Thank you, Todd, for joining. All right, and finally being able to log in. All right, so negative visualization is extremely important, right? So first concept, second, third is we all have the same goal, right? We're all human beings. We all want to enjoy time with friends and family and not to think about market when we're outside of the hours. We had this EO Chicago chapter entrepreneurial organization, which I'm part of. Every month we're meeting, every time it's the same story. I can't enjoy my friends and family. I'm thinking about my account value. Vlad, do you think market is going to go up? Market is going to go down? I lost too much money. My response is always the same, right? It happens to everybody. The only cure to avoid fight or flight response, in my opinion, you're not going to be able to predict the market with 100% certainty, right? Some people think we're going to go up. Half of the people think we're in a bull market. Half of the people think we're in a bear market, right? We're talking about 45 million, retail accounts in the United States. Okay, so that means 20 million people will be wrong, right? 20 million people will be wrong. But not all 20 million people will have a fight or flight response, right? Maybe 90% of them, but 10% of them will not. Why? Because of position size and number of positions, right? You can be a long-term investor and Warren Buffett, value investor that you don't care about this, short-term bear market. And this is all nice and wonderful unless you have too many positions or the position size is inappropriate, right? You can be a Warren Buffett, but you're probably going to lose sleep if you don't have any cash, right? The reason Warren Buffett probably never loses sleep, I mean, I don't know him that well, but because he always have billions of dollars in cash and he's waiting for this dramatic drop in the market, right? So that is very important, right? So having cash, number of position size, and that's different, right? I propose 4 positions, 2.5% maximum loss, right? And because 10% for average retail investor, if your portfolio is down 10%, you're not gonna think about this over the weekend. If you're down 20-30%, you will be thinking about this over the weekend, and trying to figure out why you're down 20 to 30%. So fight or flight response is important to avoid game theory, right? To figure out who are you trading against. If you buy, Bed Bath & Beyond, who's buying this? Is Warren Buffett buying Bed Bath & Beyond, or is this Wall Street mavens, retail, investors? Very important, right? Because you know how long they're going to hold this position. If Warren Buffett buying Bank of America in 2008, you're right in the middle of the financial crisis or towards the end, he's going to hold Bank of America even if it drops another 20-30%. But Bed Bath & Beyond, most likely first drop and the domino will follow, right? So it's important to understand who is trading, and do you want to be bull or bear? Do you want to be both when you're trading? And final concept is compounding investment, right? Compounding investment is very important. Yes, I do like to trade I don't. I kind of make fun, not make fun, but I understand. When I started trading, I love to trade forex, futures on options, options on futures, all this, the leverage, triple leverage ETFs, reverse ETF, all these, exotic products. Why? Well, because they move a lot, right? So they move a lot. That means I can make a lot of money, right? As time goes on, I realize what goes up very fast goes down very fast. And usually I would be the last one buying, right? It's like a domino effect, right? When you buy Bed Bath & Beyond, usually either in the middle of the line or at the end of the line, right? It's very hard to catch to be the first in line or second in line. So yes, you can look for home runs, but I propose thinking about compounding investing and look for singles, right? You can capture 0.5% move every day. You can capture 1% move in underlying stock every day. It's not 30, but 0.5%, 1%, you have compounding investment, right? If every week you do 4 trades, and it's a high probability system, right? You're selling out of the money premium or using earnings strategy, you can capture 0.5 or 1% every day. Every week, even if you get 1% a week, you multiply it by 52 weeks a year, that's 52%, right? So you don't need to make 30% a day. It's nice and it makes you feel good, but is it sustainable? Just kind of pause for a second and think, can you do, for the next 2 years, every day make 52% on Bed Bath & Beyond? Probably not, right? Because it's a flip of a coin, right? One day you'll make money, one day you're going to lose money. It's completely random events. But if you have something that's more systematic, where your probabilities are 75%, 80%, 65%, which are high probabilities, then as long as you have more winners than losers, losing trades, and the size is always the same in terms of your target gain and stop loss, then it accumulates. 25%, 50%, 100%, whatever. It just depends on how often you trade and what your position size is. 1 contract, 2 contracts, 3 contracts. So compounding investment is key concept. I encourage you to think about these 5 concepts every time you trade, document them, and internalize this information. Right? We already talked about cash. I propose more than 30% of your portfolio to be in cash, around 50. And in terms of portfolio drawdown, 2 to 3 days. I'm sorry, 4 positions, 2.5%. And we already went through how to determine target gain and stop loss. Some of the other things to consider: ABC patterns. Right, $1 million question right now. Everybody's on everybody's mind. What's the next step? Are we gonna just drop and retest the lows, or are we gonna resume the bull market? From my perspective, we retrace 50%. Right, we retraced 50%. 50%. Market is extremely oversold. It just needs excuse to rebound. Right, we are up 1% on QQQ, 0.5% on spiders. It's a little bit overdone. Right, so usually it's an ABC pattern. Right, you have first A, B, C, probably coming to an end. I mean, can it drop a little bit lower? Sure, nobody knows exactly, but usually 50% retracement. 50-day moving average usually is a strong support. 75% of the time we have a bounce, right? So again, you retrace back, maybe 50% retracement from 400 to 430 will get us 410, 415, 416. This is key overhead resistance, right? These are the key overhead resistance. We bounce back, right, in the next couple of weeks, and then same thing, ABC pattern, maybe retest, drop, and then continue to drop. And the question is, how far are we going to drop? I think this year, midterm election, usually the usual cycle of midterm elections, you have a sell-off, pullback into November, and then rebound, right? So you have 2 scenarios. One is, we after midterm elections, we find a low, right, and then we rebound. I still don't think we're going to break through this level, but we might get close November, December to this level. And then next year, this pattern repeats, same pattern, right? Up, down, up, I mean, this is down, up, down, up, and then, big pattern like this. So something along those lines. Every 2 to 3 months, we're making new lows. So that's one scenario, right, where we hold in the low, right? Another scenario is, that we always I've been referring is 2008 pattern. For now, pattern of 2008 is to 2022 is highly correlated to 2008. There's almost no difference. Timing-wise, we're a little bit different, right? This 15% rally or 20% rally was in March. We didn't have a, spiders had a 15% rally in June. In June, it was lower. So the timing may be a little bit off, but the pattern is the same. And then the market broke down in September, down sharply into October. I don't think this is going to be the case, right? It's still a different market. Back then, there was a financial crisis, mortgage-backed security. Liquidity just dried out. Nobody wanted to borrow or lend money to anybody. Right now, it's a little bit different, right? Inflation, Fed is raising interest rates. So I don't think we're going to have this collapse, right? But I do think that at least until March, we will have patterns of lower highs and lower lows, right? Here in November, December, we were just rebound a little bit, but big drop. So, but, November, December rebound is also questionable. I think this is what's going to happen, but it doesn't have to be this way. So my prediction that we will hold 361 till the end of the year, and then by April we will drop below 361, right? Maybe 320 or something along those lines. Okay, so that's what to expect next. Meanwhile, QQQ is up 1%. Market is oversold. Yield is stable. We haven't, yield did not break through this head and shoulders, right? Second right hand shoulder is staying intact. So that's positive. Dollar is not breaking through the overhead resistance. That's positive. High yield is extremely weak, right? More than 50% drop, more than 38% drop. There's really no support. So high yield is a good proxy for what's going to happen to the rest of the market, right? Or Bitcoin. So short term, it's oversold, right? Next 2 weeks, I think there will be a rebound, maybe back to the 50-day moving average, maybe a little bit higher. But then we will, more likely than not, September, October, we will revisit the lows, maybe even marginally break the lows because it never reached 200-day moving average. So high yield is probably a good leading indicator of what QQQ will do. And then same thing, small cap stocks. They are, let's see, they're doing a little bit better than high yield. Yeah, so 50% retracement, 50-day moving average, very similar to QQQ. But I would watch that, And same thing with ARK, right? ARK is already dropped below. Let's see, they dropped below 50%. Yeah, ARK dropped below 50%, dropped below 38%, very weak. Most likely ARK will drop and break through the lows even this year, right? Because it's already weak. So I would look at Bitcoin, right? I would look at ARK. All of these are proxy for risk taking. And Bitcoin is already at, 52-week low or almost. So Bitcoin, I would, I propose that, let's look at the futures. I think this is a little bit better. Right, so they're at 52-week low, below 20,000. So this is the proxy for risk taking. Nobody wants to take risk, basically. And more likely than not, the equity market will follow the risk market shortly. All right, any questions so far? Discord, a lot of users on Discord. Thank you for joining. Yellow Tunnel. Tradespoon on GoToWebinar. Focus high percentage probabilities, not high percent. All right, thank you for high percentage probabilities. Did I say high percent? Okay, high percentage probability trades. Thank you for that. Bob, more trading, less teaching. All right, thank you, Bob. Okay, so let's get back to trading. All right. We have different audience, so not everybody has as much experience as everybody. So good morning, John, Carmen. Carmen, yeah, A, B, C, D, E, it's Elliott waves. So Elliott waves, A, B, C, D. High yield is not inverse. I think high yield is the leading QQQ. So QQQ will follow high yield. They're just off a little bit by a few. All right, so let's do more trading. Let's review the positions first. So Baidu, so I'm still in Baidu. So we talked about Broadcom as the next earnings. So how do you take advantage of the current market volatility? You sell out of the money premium, right? You can do it on the earnings or on any instrument. So this was a perfect example, Baidu, right? Perfect example of selling out of the money. Out of the money premium. Baidu announced earnings, Chinese stock takes risk. So I sold 172.5 call and I sold 130 put, right? So sold 130 put, sold 172.5 call, sold it for 48 cents, 33 cents. So I was able to collect 79 cents. I did not want to hold the position overnight because Baidu did came close, right? It dropped to 135, right? Today it gapped $10. I didn't anticipate that, obviously, but that's the strategy, right? You sell out of the money spread. If the trade goes against you, one way to hedge is to buy the stock, right? Baidu was dropping yesterday. I sold one stock to hedge my short put, right? So short put, I'm long, and I sold short stock, right? So I'm short, and I was able to collect 50 cents, right? I was able to collect 50 cents. So overall, it's slightly profitable trade. But this is the example of the trade, and actually a good example of how to defend the position if the trade is going against you. Obviously, if you held it through the night, then I would consider closing now, right? Because premium has, now deteriorated, but that would be the trade, right? So for Broadcom, we have a Broadcom trade coming up tomorrow. It's not, I think it's tomorrow after the close, so I wouldn't do it today, but tomorrow would be the same trade, right? You can probably sell 560 call, and sell maybe 460 put, right? Put spread and 560 call spread, with the idea that it will not break through the 50-day, 200-day moving average. It will not post new lows. And the goal is to collect on the $500 stock. You want to collect, maybe $1, right? So 0.5%. So if you can collect $1 on those credit put spread and credit call spread, that would be the setup. And you can do the same trade. You don't have to do individual stocks or stocks that have announced earnings. You can do it on your favorite stock. A lot of people are trading PNW, right? So same thing. You might want to consider, selling put spread below 550 or selling call spread if you don't think it's going to break 580. So trading is about looking at the time. It could be September 2nd. Some people do, monthly trading or October trading, right? It doesn't have to be weekly, but same idea. You would collect premium. The longer you wait, the higher the premium. If you collect 0.5% waiting for 1 day, you might want to collect 2% if you have to wait, a couple of weeks, right? So, but you look at the time interval and you look at where the stock can trade, right? You look at the bell-shaped distribution curve, right? Where can Baidu be, right? Between 195 and 130. Every time there is a bell-shaped distribution curve, right? One sigma move is that it's going to stay below 195, right? And above 130. Right? Or actually 172.5. I sold 172. So the distribution curve is between 170 and 130. 70% of the time it will stay here, 2 sigma move, it will actually move to 172 and 130, and 3 sigma move, it will move beyond that. So you always think about probabilities, right? How did Bob say? High probabilities trade. High probability, right? So you look at the high probability and you are selling out of the money puts and calls, right? And collecting the premium. Same thing we've done with QQQ trade. Right, so QQQ. I sold 330, 350 call spread, which probably want to close. Let me actually put an order to close that. So by the end of the day, I'm going to close a 330, 350 call spread. So let's do that. Let me just. Close QQQ. Call spread. Market and close. So if you look at the positions, right, this is Elite Service. You can look at the position. You type in QQQ. I sold 330, 350 call spread, right? Sold it for $10. It lost half of its value. So this is the time to probably close the call spread because market is oversold. If I do think it's going to bounce, then probably this is the time to increase the portfolio delta, right? I was negative, I was bearish at 330, 340. I'm half as bearish now. So I'm going to start closing some of the short positions, like 330, 350 call spread. So by the end of the day, I'm going to close the spread. It's part of the premium service auto execute, so I have to do it at the end of the day. But I can close. I do have a 2-to-1 puts ratio, right? And then I have 280 put, right? I bought it at 15, one is 10. This was a part of the debit spread. I closed the short put. So now I think I can close the 280 put. So let me do that. Let me look at the, because I don't want it to be, I still want it to have a debit spread because I'm bearish on the overall market, but I don't want to have kind of single puts, right? Because they're going to lose value if the market does rebound. So let me see. 280. So I'm going to close 280 put. And that. Okay. Okay. So I closed 280 put because I had ratio spread, right? I have 2 long puts for 1 short put. So now I'm going to start closing 280 put spread. And remember, this was part of the debit spread. I closed the short put. And this is the advantages of the spreads, right? Because if you have, let's say, a debit spread when the market rallied, then you can close the short put. And when it's sold off, then now you can close the long put, right? So that would be an example of the trade. Let me know if you guys have any questions. Let me know if you guys have any questions. All right, in terms of earnings today, let's see. So CrowdStrike announced earnings down 0.5%, not a lot of movement. Chewy announced earnings down 5%, and HPQ down 5% after the earnings. So if you did those strategies, something to consider closing them. All right, so Chewy. Okay, let's go. Give me a second. All right. Okay, let's see. Thank you, William. Thank you, Carmen, for kind words. Todd, when you close one site, you have to have cash to cover the margin. Well, in example of this QQQ put, I never go naked, not never, but you should not go naked. So this was example of the debit spread. So when you buy, when you close long put, I had a ratio spread, right? If you look at my QQQ positions, let's sort them by symbol and descriptions. Yeah, puts. So I have one short, right? So I have one short, two short puts, right? So this is short, but then I have long, sorry, one long, and let's see, 3 and 4, kind of a butterfly. So I have 4 long and 2 short, right? So for that reason, I close this trade, right? Because market moved significantly down. My portfolio was net portfolio negative, delta negative. So I benefited from the market pullback. Now I think market is oversold due for at least short rebound. So I want to close some of these long puts and potentially buy them cheaper, right? So close to 80 put. Now I have 1 to 80 put. I have 2 shorts, 260, and 2 longs. So still bearish, but not as bearish before. And plus I'm going to close the 300, 310 call spread, right? Which also significantly drop in its value. When do I think gold will become value? I mean, gold is oversold, right? Just like, well, it's underperforming. I think it's more of a yield and dollar, more of a maybe yield trade, right? I think we have to wait for yield to drop. I think once yield drop, gold will rally. So, and again, I think yield will drop when I think there'll be more or less panic in the market. So I think we have to wait for the panic. VIX is trading between basically 20, right? Historically average 20 and 38. As long as VIX is trading between 20 and 38, gold and silver, is going to continue to outperform. But I think once silver goes up, once VIX above 38, I think that then the silver and gold miners will start rallying. But so far they're extremely weak because I think dollar is the kind of inverse of a dollar. Dollar is extremely strong, but also the 10-year yield had a pretty significant rally. Do I buy stocks? Yes. I mean, I buy stocks under 20, especially the earnings. Snap, they're actually, weren't they down 20%? I don't know how they reversed it, but they announced basically that they're laying off 20% of its workforce. It's a binary event. You can't predict when Snap is going to announce earnings. But it had pretty weak earnings. It's one of the weakest stock. The only thing I would ever do with Snap, it's kind of, I think of it as high beta ARC type trade. So I would short. I would, as I said earlier, high beta stocks, they're one of the weakest sector. So I would only, if I had to consider, I would only short. Yes, Todd, I just closed one contract of QQQ. foreign financial before dropping to the next major support line tomorrow. Kevin, I mean, first of all, people who predicted a drop on Friday, it's an element of luck. First of all, I don't think you can consistently predict, 4% drop as a result of Jackson Hole. It's a binary event. Yes, market is going lower. The question is it going higher before it's going lower? But we'll see. As of right now, it seems like every rally we had, it disappears by end of the day. We do have unemployment numbers. Again, binary effect, but my opinion, market is oversold, right? Just like my opinion was short at 430, at 399. I'm still overall bearish, but I'm less bearish than I was at 430. And the only way I can express it is by closing some of the short positions, right? Such as QQQ call spread. Can it continue going lower? Yes, but it's a less likely event, right? There's got to be, I believe in these ABC patterns, right? Especially in the bear market. This is a pretty strong wave, 30 points, right? 7% or 8% drop in very short period of time, right? In a week, we dropped 8%, right? It took 2 months to rally 18%, 16%, and it took 1 week, to lose half of it. So it's a little bit too much, pendulum swings to extreme levels. So my core scenario is, this. My core scenario is that we have this, right? So this is my core scenario. This is maybe, also possible, but I do realize this wave can continue, right? Something happens in the market or unemployment numbers all of a sudden show rise in unemployment significantly. We jump from 3.5 to 4.5 because Snap is letting go of 20% of its workforce and other tech companies to follow, cryptocurrency companies, disappearing every day. So, I mean, it's possible, I don't have a strong opinion, but I think this would be an exception, right? This is maybe 20% confidence we're going to do this, right? Straight line. Eventually, yes, but like in a week, I think 20% this, and I would say 80% that. But it's never 100, right? It's never 100. So you have an opinion, you express your opinion and probabilities, and you invest based on these probabilities. Bob, is Bitcoin dead or will it come back with the rally? I don't think Bitcoin is dead, right? At least, it's $1 trillion. I can't imagine. I would be shocked. But as long as we're in the bear market, Bitcoin is going lower. If Bitcoin is going to be 10,000, by March, I would not be surprised, right? Or below 8,000, right? So the pattern is lower highs, lower lows. And since we're maybe in the middle of this bear market, then it's reasonable to assume that Bitcoin will be 10,000, 8,000. Will it be zero? Most likely no. But it will once the bull market resume, right? And it will, right? It always does, right? It's not like this is something different. In 2008, it was market reached the bottom on March 2nd. I'm trading with the assumption that we will reach the bottom or get at least close to the bottom sometime in March and April. It doesn't have to be this way. It could be in October, right? That's probably the worst case scenario. It extends to October. But I think by March, we'll get very close to the bottom, right? Just like in 2008, we reached the bottom also in November. I mean, the bear market ended in November. No, we made marginal new lows in March. So same thing, we can reach the low, close to the low in March, and then maybe by October, another 5-10% down. But we'll probably get to the low, and then yes, then the rally will resume and the market going higher. That is my core scenario. A lot of people speculate that we might have 1980 10-year recession that bear market didn't go for the next 10 years. I guess it's possible. It's possible that for the next 10 years we're just trading between 475 and I don't know, 218, right? We retest the lows, right? I think that would be the worst case scenario. The worst case scenario for the next 10 years, we're trading somewhere between 220 and 480, right? Just chopping along and not making new highs. That means deep recession. That means inflation is going to stay there for instead of 1 or 2 years for 5 years. That's not core scenario. That is the worst case scenario. That's not the scenario I'm trading. You know, at least as of right now. As of right now, I think we will reach the low next year. We will reach the low next year, and hopefully sooner than later. All right. Mac, since there is no closing bell, do you? First of all, there is a closing bell. We do have a closing bell. Scott will do closing bell. So that's first of all. We don't have a closing bell Thursday and Friday, but the earnings to consider. Let me pause. Yes. So for today, I did it in my personal, or I'm doing it in my personal account. I'm not going to do it in trading on Tradespoon account because high risk. But there's two companies, Okta, right? Nasdaq, high beta, negative earnings, $14 billion company, you know, low volume, so it's a high risk. I wouldn't do it. I think MDB also very high risk, but this is again low volume. That's my problem. That's why I would not do it in Tradespoon account, because when I do it in Tradespoon, a yellow tunnel account, we have, you know, thousands of subscribers, right? So I have to do something that I consider limited risk. This is high risk trade. It's a software company. It's a great company. They're making databases. You know, they're struggling, not struggling. They're obviously growing, but you know, negative earnings per share. So it's kind of an ARK innovation trade. It's similar trade to CrowdStrike, right? I didn't do CrowdStrike yesterday because I think it's a risky trade. I mean, it's down 3%. It was a profitable trade. I think something similar is going to happen to MDB, but you know, trade at your own risk, basically, kind of same thing. I would go into Friday expiration on the $337 stock. That's another problem. It's, you know, 100 shares. You trading $33,000. But I would try to collect maybe, I don't know, $1.20, $1.50. If you can collect $1.20, $1.50 by selling short put spread and short call spread, I think that is a good trade. Let me actually, if you want to, I can look. Let's see, trade. Let me look at them. So MDB, MongoDB, I would go out 15%. Let's see, trade option, MDB, MongoDB. 15% on 336, that's 33 plus 15, it's $50. So I would go out $50 and probably maybe $50. So 336 plus 50, it would be 390. Okay, 200 days. So okay, so let's see, what can I get for $400 strike? $400 strike. A lot of premium. So I would go to 410. Right, or even 415. So you can get $1 for 415, which is 30% move. Right, a little bit less, maybe 20, 25%. So you can sell 411 put, 411 call spread, and then you can sell 250 put, right? 250 put. Again, not a very liquid name, high bid and ask spread. I would only do it if you're an experienced trader and if you have a large account. If you have $5,000, $10,000, I would not do this trade. If you have $50,000, $100,000, it's a risky trade, but I will do it in my personal account. I don't, you know, there's nothing kind of. Thank you, Kevin. Gold, maybe it'll pop. I think gold might pop. I mean, it's just extremely oversold, right? The yield, I think yield will pull back, and I think that the sooner than I think it will pop. But for now, it's just such a, I've been wrong on the gold miners and gold so much that I just, you know, it's trading like, a, you know, not as a hedge and a lot worse than other metals and miners, right? XME is doing much better because it has steel, it has copper. But gold miners, I'm not sure. I don't have an strong opinion. MMFI is very predictive of drops when it does above 70 level, which is just did last week. Thank you, Kevin. No, I still think there is a Christmas rally. So as I said, I still think my core scenario, let's just repeat so make sure there's no confusion. My core scenario is the following. Let's go into 2023. So just to reiterate, my core scenario, we drop 50%, we retrace 50%, we drop 50%, 100% here, right? Sometime into midterm election, right? We find the bottom, maybe not retest the lows, maybe not. And then usually Thanksgiving, we find the bottom and then we rally into the end of the year. Maybe first couple weeks. I don't think we'll revisit the 431. It's reasonable to assume we'll revisit this level. This is what I thought last time. We overshot. So I do think we're going to have a Christmas rally, but it will be either from the bottom, from 360 or from 380 level. So I think we will have a different scenario than 2008. I don't think the bull market will resume and we're going to make 440, 450, but that is my core scenario. And then in March, April, we resume this downward trend and we break it. I don't know. Usually January, February, March is very volatile. So that's, if we're going to break it, I think it's going to be next year. So this is the core. This is my core scenario, right? Obviously, it could be a little bit better. Like this was my core, but seems like the market overshoots 5% on my core scenario. So if I think it's 420, okay, it might get to 430, 440. Fine. I think we're gonna hit 380. Okay, we might hit 350. In October. We'll see. In the recession, market trades not sideways, it trades like this, lower highs, right? In recession, you have lower highs, lower lows, but you can have violent rallies, right? 15%, 20%. So that's the type of it. All right, Kevin, thank you. Fred, tomorrow model updates. What changes do you see to QQQ and Spider's forecast? I mean, it depends where we're going to close today, but the question is, how do I think? So right now, actually, model already turned positive on Spiders, right? So model already turned positive. It was negative, now it's turning positive. Model basically sees that 390 is a strong support. Can we revisit 393? Sure, but it does see a bounce from the 390 level. QQQ is weaker than Spiders. The model has not turned positive. It still shows downward momentum. But again, I know that either Spiders will follow QQQ or QQQ will follow Spiders. I think QQQ will follow Spiders in terms of predictions. I think bulls will be able to manage a rebound. So far, it's kind of weak. Every rebound is met by sell-off, right? But that's my prediction. So I think it's a little bit overdone. Spiders, I mean, can it drop to 390? Sure. It can drop to 390, but I still think we will have a rebound in the next few weeks. Thank you, Fred. Thank you, Kevin. I mean, you can't predict the crash, right? I mean, the reason 2008 there was a crash because of the Lehman collapse, right? There was a trigger. Something precipitated the event. Trying to predict China could default tomorrow, right, on its debt because they are over leveraged with all the real estate and they have millions of homes that nobody's paying for. But I don't know. We had this conversation 5 years ago. We had this conversation 2 years ago. We might have this conversation for the next 10 years, or it might happen, in October. I can't predict that. Or Russia-Ukraine war. I mean, you can't predict black swan events. Have a great vacation in North America. 6 months forecast. So 6 months forecast, I assume it's going to get less negative, and it will. Right, Nasdaq was down 16%. Right, model predicted the top in August to be 315, right? QQQ was as high as 336. So overshot by 20 points, about 7%. So spiders overshot by 5%, QQQ by 7%. So it's reasonable to assume that the low will be for the months of September around 270. And I agree. So that would be my prediction. My prediction is the low for September is 270, not 250 like it predicted before, but close to 270. So it's reasonable to assume that we might reach 270 by end of September, maybe early October, first half of October, or at least come close. So I agree with Kevin. This is not the bottom, right? For this month or next month, this is not the bottom. We are going lower, but usually it's not a one-way trade. Any question on Discord? FTLT, what is this? Bluetooth does not work with Discord streaming. It does the podcast through. Okay, so thank you. So let's see, Wepian, you can subscribe. You can subscribe. Oh, YouTube subscriptions. Okay, so perfect. So YouTube, let's go back. So YouTube, Tradespoon content. So for YouTube, you can subscribe here. And then on YouTube, again, on YouTube, every morning and closing bell on Wednesday. So on Discord, it's Wednesday morning and Monday morning. On YouTube, it's every Wednesday morning bell and closing bell. You have a live broadcast, right? Free, no obligation. So thank you for that question. And then let's see. FTLT, there is a chance that I will be put the stock, and what is your strategy if that happens? So the question was, let's say now this is one of the reasons I closed the trade, right? For whatever that Baidu. All right, so you do Baidu trade, right? Let's say I didn't close the Baidu put, and Baidu would continue to drop, right? Totally possible scenario. We came close, so you would get a sign. I usually do. For this reason, I never wait. First of all, I don't wait till Friday, and second of all, I, close before the expiration. Because if you do wait for expiration, or if it drops below 130, you might be assigned even before the expiration. So once the trade is going against you, you have to defend it and get out of the trade. Ideally, you want to do it the same day, right? You want to short the stock to defend it. It actually dropped all the way to 135 level, but doesn't matter. You made 50 cents. You made 48 and 33. That's $40. You closed it for 70 cents, and you're out of the trade, right? So you do not want to wait till expiration, and you do not want to wait till the trade is trading against you. Same thing with MDB, right? Tomorrow MDB. Well, I think risk is obviously to the downside, right? I don't think the risk is to the upside, but the risk is to the downside, right? They have bad earnings. They are letting go 30% of their staff, and boom, the stock is at 225, right? So you sold 250 put, right? And the stock is at 225. You have to defend it, right? You can short the stock and try to recoup some of your losses, and then by end of the day, you want to close the trade. Because if you wait till Friday, well, it could be at 200, right? Nobody knows. Which flow, which do they switch off? Spiders. Usually, Kevin, in my opinion, high yield is kind of a leading indicator of what to expect. Fred, thank you. Nimus, what is that? Nimus, I'm not sure if I caught your question. It chopped off, so I don't know. Oh, what is the blue line? Blue line is it's this thing, Bollinger Band. Bollinger Band. Middle line is 50-day moving average, and then 2 standard deviations. So you look at the historical data, right? And you just calculate for every day. You look at the 1 standard deviation, 2 standard deviation, and this is a 2. We are now at half the way, but when we were at 400, we were 2 standard deviation above based on historical volatility. Very important point. Because if implied volatility rises, the Bollinger Band expands. If the implied volatility drops, then the Bollinger Bands will contract. William, all right, a lot of questions on Discord. I love it. William, can you elaborate on IWM? Although has it continued going down through the end of the year? Your thoughts? IWM, again, it's not going to go, it's actually turning negative. The whole market is turning negative. Let me look, hold on a second. So the question is, IWM, the model is turning negative on Stock Forecast Toolbox. So one thing to keep in mind, in the bear market, everything is highly correlated, right? It's impossible for QQQ to go down and Russell 2000 to go up. It might be possible for a week, might be possible for 2 weeks, but that's it. The divergence, unless you're short-term hedge funds that looking for some kind of divergences between these index, which a lot of hedge funds do, but for average retail investor, you can't capture these divergences. I mean, unless you're kind of a day trader and this is your trade. But for average retail investor, it will follow. So it's the same pattern. My opinion, it's overdone, right? It dropped 50%. It looks like we're trying to build the top, right? I mean, kind of losing momentum, but we're not going lower. Right, so the bull argument will be saying, well, we already retraced 50%. We're really not going any lower despite all the fear in the market. So by definition, this will hold short term, and we might rebound back to, this is now overhead resistance. So it's possible to go back to 190, maybe even as high as 195, but then it will drop again. Right, so I don't know. First 2 weeks of September, first 3 weeks of September is up. And then this downward momentum resumes, right? Think of this as ABC pattern, very well documented, very well defined. Classical 50% retracement. So we drop from 200 to 180, we rebound to 190, and then we drop, we drop to 20 points. We're going to drop 20 points again to about 170, right? So this is a very well documented ABC pattern. It happens quite often in the bear market. Continue through the end of it reached 200-day moving average. I think stocks that have reached or traded above 200-day moving average, ultimately the low will hold. So I think we'll go to 170, and then midterm elections, maybe double bottom. And then once the election starts, we go into Thanksgiving and then Christmas rally. So that's my core scenario for Russell 2000. Obviously, there's a best case, there is worst case, but this is my core scenario. This is what I think is going to happen. All right, it's 9:30. Sorry, it took a little longer. Thank you. I am going on vacation, so there won't be closing bell on Thursday and Friday. We will have a closing bell broadcasted on YouTube. and broadcasted on GoToWebinar. We will have a morning session every day, but we will not have closing bell this Thursday, Friday, nor we will have it next week, except, again, Wednesday on YouTube and GoToWebinar. Thank you very much. Have a great day. I would consider overall for your portfolio to be bearish, right, or market neutral. Slightly bearish or market neutral at this point. I think that would be the best composition. For positions, maybe you have too long and maybe you have too short. All right, thank you on Discord. You guys, awesome. A lot of participation, a lot of questions today. That makes me extremely happy, and better quality stream. Can't get more happy than that. Well, you can sign up here. I'm going to put the link in the stream chat. You can sign up for Yellow Tunnel. All the recordings and all of the trades are there. All the subscriptions are there. Thank you for participating. Thank you for participating. You guys made my day today. All right. Okay. Thank you, Discord team. Thank you, YouTube. Thank you for participating live. Love it. Please click on subscribe button and join us on YouTube. If you like any of the contents, please share them with your friends and family, or if you are on GoToMaven and everybody's trading Bed Bath & Beyond, maybe suggest one way to hedge Bed Bath & Beyond, buy an SH or buy an QQ put spread. Bill, thank you. And the one PE ratio. It's a PE ratio. So this is PE ratio, right? So for Microsoft, yeah, the blue line is PE ratio, right? Where PE is historically how it's fluctuating. Why do I like 50? I think 50 is just, that's what majority of the people look for. Kevin, weakest link is China breaks down. Yeah, I agree. Just timing is a little different. Difficult to predict. Can you show spiders if you do head and shoulders? I assume you're talking about this head and shoulders, like this recent one, right? This, and the break. It does look like, I don't know if it's a classical head and shoulders, but okay, it looks like head and shoulders. And we already have this breakdown. So that event already took place. Usually it could be the same line, right? So for 20 points, so that's why a lot of people said 390 will hold, right? Head and shoulders, 410 to 430 is 20 points, from 410, 20 points. I think we're going to go below 390. I think we're going to go below 390, but we'll see. It's a PE ratio, Nimus. William, enjoy. Raymond, enjoy. Thank you. Nimus, thank you. Well-deserved vacation. Thank you, Fred. All right, guys. Thank you very much. I did not go over. Let's quickly, since you guys are still there. I did not go over. Let me see if I want to make any other changes. So FCX, I'm bearish. I'm not going to make a change. This is December. I think market is going lower. So FCX, I'll keep it the same ways. I just have a put spread. QQQ, we saw the change. I'm going to close the short call spread, and I close one of the QQQ puts. SH, same. No changes to SH. I'm going to continue holding this as a hedge. And then I have XL. I have small position in Spider for rebound. And then XLF, still bearish on XLF. That's one of the weakest sector. I think that will continue to drop. I have a put spread, put and credit call spread, and then I have XOP put, which is continued to drop, rebounded, but all right, that's all I have for today. Thank you very much. You guys are awesome. Enjoy your, I will enjoy my time off. You guys enjoy your time off, and follow me on YouTube. I will make sure that, at least I will try to do a daily update, either video blog or regular blog on both Yellow Tunnel and Tradespoon sites. Thank you very much and have a great day. I encourage you to sign up for both, right? Yellow Tunnel and Tradespoon, very complementary sites. Usually, if I were you, I would sign up for both sites. Yeah, SPX Spiders 390 it's a good support. I agree, Kevin. All right, guys. Thank you very much. Have a great day, and I will see you in a couple of weeks.